So hello, everyone. Thank you for joining us for the second quarter 2023 LP update for REFASHIOND Seed, the rolling fund managed by REFASHIOND Ventures. I'm flying solo this afternoon. Lisa is in Sweden, and so let's see how things go. Today, we're going to go through a portfolio update. Then we'll talk about fundraising. We'll talk briefly about the macro environment. We'll talk briefly about an update to our strategy, and then I'll open things up for a Q&A. Just as a reminder, the foundation for our thesis is that we're at a point in human civilization when supply chains are going to be refashioned, primarily for three reasons. One, geopolitical tensions are increasing. Two, the climate crisis is getting worse. And three, as human beings, we continue to consume, and demographics are changing and putting pressure on supply chain. So the way we see it, the opportunity is massive, and our job, my job and Lisa's, is to identify the pockets in which we believe that venture scale returns are available and to invest very early in those pockets. Between July 2021, when we launched the fund, and the end of June this year, we have made 39 investments. This slide is confusing. So this goes from July to July because we updated it just 2 days ago. But for the period of time that this update is referring to, we had made 35 first check investments. That meant that we made 39 total investments, with 4 of those investments being re-ups on the first investment that we made. The investments we made in July are Ceres Technology and Freightland. In the second quarter of this year, we made 1 new investment and 2 reinvestments, and I'll get into those later on in the presentation. The breakdown of the categories that we focus on, the 4 categories that we focus on: data, advanced materials, advanced manufacturing, and next-gen logistics, is as follows. As you can see, 61%, the majority of our investments fall in the data and decision analytics category. That's in keeping with our hypothesis that what's happening is that the innovations in software technology are being adopted in industry, in physical industries, and are being used to manage what goes on in the real world. And so to us, it makes sense that this is the case, that for most of the investments that we make, data and decision analytics will either be the primary investment category or the secondary investment category, and that is reflected in this chart. The demographic breakdown is changing slightly. You might remember that some quarters ago, the split was more even between female and male CEOs. That is skewing now in favor of male CEOs. I think what is happening is that in the period between, let's call it the middle of 2022 and now, fundraising has been much more difficult for everyone, for startup founders across the board. What that also means is that female CEOs are having a harder time closing the rounds that they've been raising. In fact, what we noticed last quarter is that out of, let's say, 7 or 8 startups that were in the pipeline, only 1 or 2 actually made it to the finish line in terms of the rounds that they were raising. And just yesterday, when I caught up with some of them, they said they had each decided to suspend fundraising, and we spent a lot of time talking about how they might rethink the rounds that they were trying to raise, or maybe just suspend a fundraising altogether till the first quarter of 2024. The written update that we sent in July has more detail on what's happening with the portfolio. Overall, the economic environment has been difficult. What we've encouraged our startups to do is to focus on spending their time with their customers to help their customers succeed, and less time chasing investors. There has been a bit of a paradox, which has been captured by some surveys that were published recently. On the one hand, supply chain executives say they are going to be investing more in adopting innovation. On the other hand, investors who poured a lot of capital into supply chain logistics specifically in 2021 and 2022 seem to be pulling back. So that, like I said, it makes it difficult for startups to raise funding. On the other hand, for investors who stay committed to that sector, I think it presents great opportunities to make investments at attractive prices, and we'll see some of that later on. Arcstone, which we invested in Q1 2022, originally headquartered in Singapore, and as we said, was in the process of moving its headquarters to the United States. Now has a presence in the United States. It has showrooms in Detroit, in Chicago, and I believe is opening another one in Austin. And the CEO expects to have moved to the United States, if not by the end of this year, sometime early next year. Simply Fiber is in the process of gearing up for some big announcements early next quarter. Unfortunately, I can't discuss what those announcements will be yet. There'll be an update about Ship Day. The company is doing well, and we reinvested. True to Form is another one that we reinvested in this quarter, and they will be making some announcements soon. Just this morning, if you follow Natural Fiber Welding on social media, you may have seen an announcement of their collaboration with Stella McCartney. BuildSock ought to be making a big announcement later this quarter. One thing that has happened is that there has been a switch in the CEO's role. So Wilson, who was Catherine's co-founder, has stepped into the CEO role, and Catherine is much more focused on customer success and the product. The platform is in testing with early customers now, but ought to be available to the public before the end of the year. Min from YZ is traveling in Europe. As I mentioned in the written updates, YZ won a big RFP that they're in the process of fulfilling. Overwatch is in active conversations with early customers. Jibe is also in active conversations with some very big customers who are attracted by the product that Jibe is bringing to market. And you might remember that Jibe is basically attempting to digitize all frontline work. So for employees who work on the front lines, first responders, critical employees of that nature, Jibe is developing a platform that makes it easy to communicate with them without the need for paper and pen and manual processes. Transmute is in SAP IO's program. It's interesting that they got into the program well after we had made our first investment. Prospective is finally at the point where they felt comfortable announcing their seed round. Parsimony is another company that is in the SAP IO program. And when I caught up with Richard and Roland about 2 weeks ago, they told me that they're having interesting customer conversations based on their participation in the SAP IO program. First Shift is out of stealth, I believe. Maybe I'm wrong, but they are out of stealth and working with early customers now. Channel 19 is the new addition to the portfolio from last quarter. We made 2 reinvestments, and those 2 reinvestments are in ShipDay and True to Form. Channel 19 is building a vertically integrated load search, booking, and payments platform for the cold chain for the refrigerated trucking industry. So this is a market that is not well served by a platform that is modern enough. Tony has a family background in the industry. His family has been in cold chain for decades. And so between him and his co-founder, they recognize an opportunity to modernize the infrastructure that the industry runs on. The target at the beginning is for small companies in that market. And then as the platform gets more robust to move up market. Like I said, we decided to reinvest in True to Form. Our first investment in True to Form was in the pre-seed friends and family round. It has been a joy to see Janice and Margaret execute on the small amount of capital that they raised. They are testing a version of the platform that works on the web and that travels with users from one e-commerce property to another. So far, it is creating a lot of enthusiasm in fashion brands that sell online. And so we're excited to see what happens when they release it towards the end of the year. ShipDay is the other company that we reinvested in. Moin and his co-founder, Adam, are fantastic. I crack a joke about how frequently I speak with Moin about what they're doing at ShipDay. It was an opportunity to invest at what we believe is an attractive valuation, which is more a function of the macro environment as opposed to how well the team has executed. They're heads down now, growing the company and hiring new team members. The universe of our co-investors continues to increase, but from my perspective, this isn't that interesting. It's interesting to some people, but from my perspective, it's really what happens with the companies that we've invested in that matters more. That said, some of the LPs that we speak to about the institutional fund we're raising want to know who we're co-investing with. And that ecosystem of co-investors continues to grow. I shouldn't underplay this though, because for the startups in our portfolio that are really early, these are funds that we can introduce them to when they go out to raise follow-on rounds. In terms of fundraising, committed capital to the rolling fund is now north of $2 million. As I said, between July and June of this year, between July of 2021 and June of this year, we've made 39 investments in all. That represents investments in 35 startups. We closed 3 investments in Q2. One of those was new, that was Channel 19. And like I said, True to Form and ShipDay were follow-on investments. Last quarter, or actually the first half of this year, has been slower than we would have expected. And that is mainly because a lot of investors are sitting on the sidelines trying to decide what to do next. If your subscription is coming to an end this quarter, we'd love it if you would consider extending for another 4 quarters. And if there's anything that you'd like to discuss, please don't hesitate to send me a note and we can find time on the calendar. The performance of the fund over your subscription period is not something that we calculate. That's something that AngelList monitors and calculates. And so if you have any questions about performance, I'd be happy to talk through that with you, but you can also reach out to the team at AngelList if you have specific questions. We continue to raise for the rolling fund. And so if there's anyone you think will have an interest in our fund thesis, please don't hesitate to let us know and we'll send you a material that you can share with them. This summarizes fundraising and deployment. So like I said, we've raised north of $2 million. We've closed 1.6 of that, and we have put $1 million to work. I'd like to make a comment about the pace at which we've deployed capital, because there was at least one instance in which one of our LPs was upset that we weren't deploying capital more quickly. In hindsight, I think the pace at which we deployed was fine, because if we had deployed more quickly, we probably would have been investing at valuations that looking back would have been too high. This table is a summary that we extracted from a report that AngelList published on the state of early stage venture in the United States for the second quarter. And this is interesting because it shows what the median valuations were for investments across the board. So all sorts of investments, supply chain investments included. Our fund is mainly a pre-seed and seed fund. And so I've highlighted in the box where I think it's worth paying attention to. So this is what happens in the general market. In the pre-seed market, about 25% or so of the investments happen at $5.5 million or below, and roughly 25% happen at $12.5 million or above. And similarly for seed, 10 million for the 25th percentile and 24.5 million for the 75th percentile. The next table is a summary of where we land. We've made 16 pre-seed investments and 21 seed stage investments. The pre-seed investments range from a minimum of a $5 million evaluation to a maximum of 17.5. Just for comparison, the AngelList data shows that the range is roughly 5.5 to 12.5. So on the higher end of the range, we're slightly north of where AngelList says we should be, but we're roughly where the market is at the lower end of the range. And for seed stage investments, we've made 21 seed stage investments, ranging from a minimum of $6 million to a maximum of 42.5. The 42.5 is interesting because that is a rich valuation for a seed stage investment. That being said, those instances where we've invested in startups at the seed stage at such high valuations, it's because we have a conviction in the founder and we have a conviction in the market. We believe that if things work, the way that we think they will, based on our understanding of the opportunity, the market, the founder, and the team, that this will turn out to be a great investment. So the summary here is that overall, we're within the market's expectations. We're not too far north of where things would be generally. So for the institutional fund, we're raising an institutional fund. It's going to have the traditional structure. It will have the same thesis as the rolling fund, the same investment strategy, the same investments, and the same team. We'll make larger commitments, and we're targeting a first close of Q1 2024. If you have any relationships with family offices or institutions or corporations, we'd love some introductions. I'll talk about the macro environment for a little bit, but I won't spend a lot of time on this, mostly because the themes haven't changed and the specific stories are not that different from those that we have shared with you in past quarterly updates. So like I said, the main themes are increasing geopolitical tensions, climate change and severe weather events, and the effects of demographics and consumer behavior. One story that I think is worth highlighting more than most of the others is this story about the Panama Canal and how severe weather could affect its operations going forward. So because of a lack of sufficient rainfall, the management of the Panama Canal is saying that the canal must adapt or die as water levels drop. If you remember what happened during the Evergreen, the crisis when the ship was stuck in the Suez Canal, think of this as that at a bigger scale. And if this is happening with the Panama Canal, then the same sort of problem is going to be faced by the Suez Canal. And so this, while it's not something that the public is focused on right now, if this were to come to pass in the way that the folks at the Panama Canal are thinking about it, it could have a big and negative impact on global trade. This story is about the EV supply chain, and it's an interesting story for two reasons. One is the tensions between China and the United States. China is dominant in the EV supply chain right now, and also the instability of other parts of the world in which raw materials for EV batteries might be derived from. So in Africa, for example, the regions of Africa where cobalt and other such minerals are mined are very unstable. And so that makes the role that Latin America plays in the EV supply chain quite significant. The role of Africa in global supply chains is the focus of this story. Again, the issues there are political stability and the robustness of the logistics infrastructure. Cyber attacks are a topic that we've been focused on for quite a while in our previous LP updates, and that is the focus of this story as well. The key here is that it appears the concerns of US authorities are escalating. It's not clear whether that is because specific incidents have happened, since a lot of those incidents are kept secret, or whether it's just a concern about what they perceive might happen down the road. The story from the Brookings Institute focuses on the laws, the recent laws that have been passed to boost manufacturing and infrastructure. And the bottom line is that while the laws have been passed and money has been appropriated, this is happening at a time when the macro environment makes it less hospitable for investments, right? So inflation is high, interest rates are high, and that means that the capital that has been appropriated for infrastructure and manufacturing probably will not go as far as it could have if this money had been put to work much sooner. And this is a trend. This story is part of a trend that we've been monitoring since December 2019. And basically, it's the trend of citizens taking governments and corporations to court over the effect that laws or inaction on the part of governments and the activities of corporations are having on climate change. This is the first time that a judge in the United States has sided with young people suing a government over the government's role in controlling climate change. We're updating our thesis slightly in a conversation with Albert Wenger of Union Square Ventures. He pointed out to us that while we feel very comfortable with the concept of supply chains, it is still a concept that most people don't fully grasp. But it dawned on him that when we talk about the fund's thesis, what we're actually describing is the transformation of industry through innovations in supply chain technology. And so we have started to talk about the two concepts in tandem in order to make the fund's thesis more approachable to more prospective investors. This is a repetition of a slide that you've seen before. We started by building a community in 2017. And then in 2019, we started building Refashioned OS at the behest of a large global fashion company. And Refashioned OS really helps us assist the startups in the portfolio with scaling and orchestration. And so that's key to our strategy. On the one hand, we have the fund. On the other, we have the community. And working with both of those, we have ROS, which helps us scale the startups in the portfolio. On that note, I will open things up for Q&A. If you have a question, feel free to unmute your microphone.
Hey, Brian, it's Zach
and go
here.
ahead and answer.
Can you hear me?
Yes, I can.
Hey, buddy. That's good to hear from you. Thanks for the update. Just want to comment here.
Yeah.
It's obvious you know every one of your investments well. You're speaking to them very eloquently. My question is related to the Inflation Reduction Act and how you see that impacting your investments that you've made already. They're probably, I know you mentioned some of it just here in the tail end on the news side, but have you been counseling, or there are specific opportunities that you're able to drive to? Because it does seem that there's significant amount of funding that may be available. I'm just curious if you're seeing that trickle into your world.
Not yet. And I think it's mostly because our startups are so early. And so as you know, Zach, for a pre-seed or a seed stage company, really finding early customers who will adopt the platform or the product now and will do so in a way that doesn't strangle the company is absolutely key. And so while we're paying attention to what's happening, which companies are doing what in which parts of the country, we're not really focused on pointing our startups to those opportunities just yet. Now, the exception to that is a company like Arcstone. Arcstone, although they haven't raised a Series A round yet, have a platform that is really robust. And that is because they built the platform and the product in Singapore. They scaled in Asia, and now they're coming to the United States. So with Arcstone, for example, we can introduce them to a Fortune 500 company, and they already have enough experience for that to be a great engagement. And in fact, in some cases, Lisa and the team at ROS are doing exactly that. For every other startup in the portfolio, except perhaps Leaf Logistics and Natural Fiber Welding, that's not something that we think is going to make sense just yet.
Okay, thanks so much.
Yeah, thank you. Any other questions?
Fascinating as always.
Thank you, Warren.
Yeah, it's a great update, Brian. Thank you for that. I'm trying to come up with the right words for this, but kind of along the lines of Zach's question, in terms of this trend of decoupling from Asia, to whatever extent we're doing that, and increasing imports and exports, in particular with Mexico and Latin America.
Mm-hmm.
I'm trying to figure out which firms in the portfolio are most likely to benefit from that, and if we're seeing any of those benefits yet.
Arcstone is already in Mexico. They already have customers in Mexico for exactly that reason, right? Some of their customers are moving operations from parts of Asia to Mexico, and they're saying to Arcstone, we need visibility on our manufacturing operations in Mexico. In terms of the rest of the startups in the portfolio, that isn't a major, it's not a major factor yet. It's not a major factor yet. That being said, I think as we go into the rest of this year and into 2024, and assuming that things remain, that all of a sudden China and the United States don't become BFFs, I think we'll start to see more. So, for example, I can see a situation where Stimulus's customers say to Stimulus, how can you help us source suppliers in Mexico? Right, and for the team at Stimulus to start to think about that, but that hasn't. It's not an area of major opportunity or concern just yet. Yeah. Thank you.
Thank you.
Hey, Brian, I had a quick question. Thanks for the update.
Yes, ma'am.
I was wondering what your view was on, now that interest rates are increasing, and as you look at startups and their funding, sometimes startups view debt as a necessary component of their funding. And so, I'm curious as to what you think the higher interest rates will do to impact, growth and development of startups, now that debt might not be as attractive an option for them.
That's a great question. This might be a weakness in how I think about venture, but I don't spend a lot of time thinking about interest rates, mostly because, at least at the pre-seed and seed stage, which is where we focus, I think the most important thing a startup can do is focus on solving problems for its customers. And I think if a startup does that and does it well, generally things will be okay. Now, in this environment, there is no doubt that it is more difficult to raise funding. That is true for everyone. It's true for us as well. But I think if if a startup can show that what it does for its customers is mission critical, and when you're creating an innovation in supply chain, that's by definition what the startup is doing. Right, if they can make the case that what they're doing is mission critical, that when times are difficult, their customers tend to use the product more rather than to use it less, then funding should be available. Now, the difficulty that supply chain startups face is that typically the problems they're solving are not problems that generalist investors understand well. And then there is also a small community of supply chain specialist investors. So usually what happens is they talk to the supply chain specialists. Probably the supply chain specialists have already invested in a competitor. And so that means that they can't invest in another startup that does something similar. And then they pitch to a lot of generalists who don't understand what's going on. But what I believe is, again, just like I said, I'm repeating myself, I'm going to sound like a broken record, but if they can make the argument, look, 6 months ago, here is where we were in terms of customer development. Here is what that looked like 3 months ago. Here is what that looks like now. Even generalist investors understand that. Right? They might not understand the specific problem, but if you can show consistent improvement in your relationship with your customers, their use of the product, their adoption of the product through increasing usage or revenues, even generalist investors understand that. Now, the role that someone like us plays is if we invest early, then we can help tell the story. We can help make the case. And sometimes that goes a long way in getting them funding. So that was a long and winding way of saying I don't pay a lot of attention to what's happening with interest rates when it comes to how it affects startups and fundraising. What I tend to focus on is, let's see if we can make your customers happy, and then let's use that to help you raise the funding that you need.
Yeah, no, that makes sense.
I feel as if that's an unsatisfying answer, but that's my answer, and I'm sticking.
No,
with it.
no, that's fine. No, that's perfectly good. But like, I guess when you think about like supply chain investments that you make, the higher rates of interest rates, higher interest rates are impacting trade finance, and I would think so making the cost of financing trade more dear, and potentially making companies that you're looking at to invest in who can provide more efficiencies in the supply chain more valuable or more in demand. Would you not agree? Yes,
that's precisely it. In fact, I wrote an article for FreightWaves early in the pandemic. There was a tendency for people to say, well, Mr. Supply Chain, how are your supply chain startups going to fare now? And the argument I made is the premise that a supply chain startup comes to market with is, we're going to help our customers do more with less. And if that holds true, they ought to be fine. Right. This isn't NFT for cats. This isn't, Tinder for pets or something of that sort, where it's like companies need to continue to grow through good times and bad. And if you're creating an innovation that enables them to do that, generally you should be fine. Now, there are all sorts of variables that might make that not be true, right? If your management team is incompetent, then you're going to pay the price for that incompetence. Well, all else equal, in difficult economic times, a supply chain startup should fare relatively well. One point I'll make is, and I say this on every podcast on which I'm a guest, traditionally, when people have said supply chain technology, what they have meant is logistics technology. But we know that logistics is one of the many things that happens in any supply chain, right? Our argument is the opportunity is much bigger than just logistics, especially if you're starting to invest now. And so that's one complication I think it's worth keeping in mind, because when Capgemini says we did a survey of supply chain executives and all of them say they're going to invest more in supply chain innovation, and then the Wall Street Journal comes out and says, well, VCs are investing less in supply chain technology startups. What the Wall Street Journal is really talking about is investments in logistics technology startups. But because of the way they're using the words supply chain and logistics interchangeably, it can seem as if it can seem as if the prospects for supply chain technology are dire. No, the customers are looking for innovations to help them get through these tough times. And so if you're a startup that's focused on the customer, you ought to do fine.
Yep, that makes sense. Although my dog might disagree with your Tinder for Pets comment. All right, thanks, Brian.
Thank you. Thank you, Sam. Any other questions? Hi, Dave. Well, if there are no other questions, I will bring this to an end. Our next update is going to be significantly more packed. When Lisa gets back, we'll start planning it out. But the next update will be 2 years since we made our very first investment in autonomy. So we'll go through performance. We'll go into a bit more detail on some of the startups in the portfolio where we can talk about what they're doing publicly, and we'll see what has happened in the markets at that point, and we'll talk about that too. Thank you for making the time to join the call, and hopefully I will see you in next quarter's update. Thank you. Bye-bye. Bye-bye.